Earlier this morning, we got some export inspection numbers from USDA, and they seem to be a little bit of a disappointment, at least on some lines of that report. Corn, it depends on how you look at it. It was down from the week before when we had 1.78 million tons that were shipped out of the country. That was a week ago. This time it came in at 1.01. So yeah, it was down significantly, but still over a million tons. So all in all, it's not all that bad. The sorghum number, it's 37,212 tons last week, and that is a little bit of a jump up from the 18,000 tons that we had the week before. But all in all, still kind of a weak number there on the sorghum. Soybeans, they came in at a very paltry 103,965 this past week. That compares to the week before when it was 205,155, and I remember at the time we didn't think that was that great of a number either. So down from that total. And the wheat really fell off too. 285,645 tons last week that were shipped out of the country. That compared to 551,490 the previous week. Let's get a review of our current ag trade in the grains. Let's go to the corn board here. And currently, with our quotes provided by bar chart, still surging ahead. September 19 higher at 549 and a quarter. December 19 3/4 higher at 539. Actually got as high as 540 3/4 at one point. In our soybean trade, August now 34 higher at 1336 3/4. November 40.5 cents higher at 1310 1/4. Remember the old days when we used to have a 30-cent trading limit in soybeans? Now it's all the way out to $1, and that's the normal limit now. And in our wheat market in Chicago, you have September 12 higher at 652 3/4. And even that is about 6 to 7 cents off of our earlier high of the day. Kansas City wheat, September is 16 3/4 higher at 625 3/4. In that spring wheat market in Minneapolis, September is 24 1/4 higher at 832 1/4. Well, what better time to bring in none other than Todd Bubba Horowitz of BubbaTrading.com in Chicago. Big time rally going on in the grains, but is this just because of the end of the month coming up, or is it short covering ahead of the report on Wednesday? How do you read the tea leaves today?
Good morning, Marlon. It's probably a little bit of everything. I mean, if you take a look at last week, we got hammered. So, to have a bounce back rally would not be any surprise. I think we have to remember that markets don't go straight in one direction, whichever way they're going. And, you get a huge sell-off, you expect to see a little bit of a bounce. I would say that they're still slightly negative, and I would think that corn would have to trade over 550, soybeans would have to trade over like 1340, and wheat would have to be over 660 before it would probably turn positive. I mean, we're going to see lots of volatility, as you mentioned with the limits. I mean, when I first started trading, beans were $4.50, wheat was $3, and corn was $2. So, we get more volatility. It changes the limits.
Gosh, that was a long time ago. I don't even want to go there, Todd. Yeah, we were we were talking about limits on soybeans at 30 cents, and that was a big move back then. But on the other hand, the extra elbow room does allow the markets to move where they need to go and get there quicker than what it used to be. I remember back in the 80s and 90s, I mean, you would have back-to-back days of limit moves in the grains before they finally got to where they needed to be, and nowadays you can do it in a day or two.
Well, no, listen, Marlon, really what it does is it calms the markets, and they don't get locked up for a couple of days because it gives those that are panicking, either sellers or buyers, a chance to catch their breath and let the markets kind of resume equilibrium. So that's why they've raised the limit. Same reason they have circuit breakers in the equity markets now.
Okay, we'll take a look at our livestock trade as well here in just a moment. Todd, come on back. We'll be talking with you then about new developments there right after these messages. Come on back. We are back with Todd Bubba Horowitz of BubbaTrading.com in Chicago. Well, we talked about the volatility going on in the grain markets, and I alluded to the fact that we're getting toward the end of the month here, and sometimes you can see some book squaring take place, and it's not only evident at the end of a month, but also maybe even more so when you get to the end of a quarter, and that's what we're looking at this week here, Todd. Does that also impact our livestock trade?
Marlon, it affects all markets, and you're seeing Again, listen, cattle is a little bit lower because it's had such a nice rally. It's a little bit of a pullback, and hogs are higher because been beaten down. But you do have the quarter end coming. You've got an extremely slow week. You know, we've got July 4th. Next Monday is the national holiday, but Sunday. So people are going to be getting out of town as fast as they can. I think the only people that'll be working will be the farmers, because every other business and every other trader will be gone long before. And I think that it's going to be a very slow week, which could create some vacuum type moves or big moves. But overall, there'll be no volume behind anything.
Okay, we had a lower trade, as you mentioned, in the cattle market early on today. Now, I want to take a look at our new cutout values that just came out a little bit ago from USDA. So here's our midday update. Down again, choice cuts down $1.40 at 303.16. Selects down $1.51 at 274.67. The spread is $28.49. Let's check out what happened on the wholesale pork trade this morning. Well, amazingly, carcass values $5.08 higher at 115.12. And the ham market made a big move today, $17.24 just this morning, all the way up to 93.44. Todd, sometimes people say the ham segment is the one to watch. I don't know if that's the case this time, but that's a big move for that ham market. I wonder why.
Well, you know, look at we've seen some pretty drastic pressure, Marlon, and you know there's always what we call the return to an equilibrium, an equal trade market, and you know we've been under so much pressure the last few weeks. You know, after having the big moves higher, and in fact when hogs actually overtook the cattle markets, so you know you're going to see some of this natural trade and some of the natural things that are happening, but I don't think it's really a forbearance of what's going to happen. I think we're going to see. Hogs are probably going to work their way lower. They've had a nice move, and I think cattle is going to continue to run their way higher.
Right now, the August lean hogs are $2.72 higher. They're at 102.50. There for a while, it was hitting limit up today. It's not doing that right now. On the live cattle side, with our quotes provided by Bar Chart, you have the August contract at $1.37 lower at 121.42. That's just a dime from our low of the day right now. October down $1 at 127.40. And on the feeder cattle market, you currently have the August $2.22 lower, 157.32. That's $2.30 off of our earlier high this morning. September is down $1.65. Well, thank you, Todd, for the time this morning. Good to hear from you again, and good luck trading this week. Todd Bubba Horwitz, BubbaTrading.com in Chicago. Janet, it's all yours.